are you?
Good,
कैसे हैं आप?
Alhamdulillah.
ठीक हैं?
Yeah, Alhamdulillah. I think we are
Anish,
the time.
this is Anish, and Anish Ahmed Ali Siddiqui. He's the director of IBA CEIF, and he's also senior executive vice president of Mizan Bank in Pakistan.
Alaikum.
Assalamu alaikum, all the panelists. Welcome for the seminar and webinar. We are now live. I think, as Mr. Zia, we can let's start the seminar formally.
Alaikum. Can everyone hear?
Yes, we can hear you. अच्छा, आप participant.
Alaikum ji. Dr. Farrukh, can you hear me?
Yes, I can hear you.
Okay. Assalamu alaikum, everyone. My name is Khalid, and I'm Senior Program Manager of IBSE. On behalf of IBSE, I welcome everyone to this webinar on Introduction to Islamic Fintech. And we are starting the proceedings with few verses from the Holy Quran. Bismillah ar-Rahman ar-Rahim. Inna atainaka al-Kawthar fasal li rabbika wanhar inna shanika huwal abtar. Sadaqallahu al-Azim. Now I would invite the director IBSE, Mr. Ahmed Ali Siddiqui, who is also the senior executive vice president of Mizan Bank and group head of Mizan Bank, to please say a few words.
Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. As-salatu was-salamu ala Rasulil Kareem. I like to welcome all the participants for the webinar today on behalf of IBA Center for Excellence in Islamic Finance. I also like to welcome all the panelists and experts who have joined today on a very important topic of Islamic Fintech. IBA Center of Excellence in Islamic Finance is one of the leading regional institute for promoting Islamic finance in Pakistan and even outside Pakistan. Our focus is to disseminate the knowledge and latest trend about Islamic finance. We are working with the regulators, we are working with the industry experts, we are working on the latest emerging trends of Islamic finance. And this webinar is the part of our continuous efforts to promote discussions and to promote awareness of Islamic finance trends to the general public. Today, the audience is not only from Pakistan but from different countries. We have registration from almost over 10 countries for this webinar, and I'm sure this webinar will add value to all the participants who have joined us today. I'd like to thank Dr. Farrukh, Habib from Alif Technologies, our expert on fintech, Mr. Anish, Mohammed, Syed Asif Zaman, and IBA team for managing this event very successfully. Islamic fintech or the application of technology for using Islamic finance is one of the emerging trend today, and especially in the COVID era. We have seen that pace of digitization and the use of digital technology for accessing financial services has taken a momentum, especially in context of Pakistan and in other countries where we were lacking behind in the race of digitization. But COVID has provided us a unique opportunity. Now we are seeing the digital onboarding, the digital application of financial technologies, the trend of digitization and the volume of transaction that are happening through digital means has multiplied manifold in the last 12 months, and we think this trend will continue. And the concept of Islamic digital bank providing technology access and customer onboarding and customer financing to the customers on the Islamic basis is something that we are witnessing, and we would like Islamic financial industry, not only in Pakistan but in across the world, to get the benefit of the technological convergence or technological advancements in the field of banking and finance. And based on this opportunity, I believe that Islamic finance can capture the market rapidly. We can reach those corners and part of the banking population which were previously not getting the benefit of Islamic finance. So with this thought in mind, we have organized this seminar, and I would like to again thank our partner, Alif Technology, Dr. Farrukh Habib, for partnering with IBSC for hosting this seminar. So without taking much, I will now directly go to the topic of the seminar, and I will again thank all of you for joining us today. Thank you, Zia.
Thank you, sir. Thank you, Ahmed, sir. Now I would request Dr. Farrukh, the co-founder of Alif Technologies, to say a few words about the Alif Technologies and about the webinar. I would also like to introduce him, that he's a co-founder of Alif Technologies. Dr. Farrukh is a PhD in Islamic Finance and has done PhD in CEIF, Malaysia, and he's mashallah is also an alim. Uh, so without wasting any further time, Dr. Farrukh, over to you.
Thank you so much, brother Zia Khalid. Assalamu alaikum wa rahmatullahi wa barakatuh, and hello everyone. I would like to welcome everyone in this webinar, and I really appreciate the efforts of IBSCF, and I hope that this collaboration between IBSCF and Alif Technologies will be very productive and fruitful, inshallah. Just to give you a brief introduction of Alif Technologies, and then I will move on to our guest speaker, Anish Mohammed. I will just give you I will take just few minutes from you to give you the introduction of Alif Technologies. Actually, it's a professional firm with regional presence and global focus and representation. And Alif Technologies is focusing on services, various services and aspects of digital business in the United States, in the United Arab Emirates, UAE, the Gulf countries, GCC, and all over the world. And we offer our clients a complete range of professional services, including software and digital platform development, educational courses, corporate trainings and workshops, consultancy and advisory, strategic research, and market insights. We believe that there is a huge potential and great benefits in cutting edge technologies like blockchain, artificial intelligence, big data, predictive analytics, quantum computing, etc., in solving real world problems for both SMEs and large organizations, and even for individuals, actually. And bonding ourselves with our common belief, we are a group of enthusiastic people with well-diverse skills, expertise, qualification, and experience, ready to cater our clients' needs. This is actually Lift Technologies, which we are focusing. So our main focus area are three. Number one is advisory and consultancy for Islamic finance and fintech. And we also do corporate trainings, workshops, and educational courses. And thirdly, we also collaborate with the IT solution providers and developers, so that like we could also offer platform development services to our customers. And we would like to actually pioneer the digital transformation, fintech, halal digital economy in the light of Islamic legal, ethical, and social principles. So this is and this actually this webinar is a very good initiative, in the sense that like it actually brings us to get closer to our goal and objective. And with this, actually, I would like to basically invite in Anish Mohammed. Actually, I am very thankful to Anish for agreeing to speak in this webinar. Let me just tell you about Anish. He is an accomplished multidisciplinary figure who has worked as a strategy consultant, blockchain researcher, cryptographer, medical doctor, and bioinformatician. He is the co-founder of Ethicsnet and RSQ Labs. He focused in the first half of his career on researching cryptographic algorithms and protocols at three different research groups. He has also worked as a strategy consultant for Accenture and Capgemini. These are actually very famous consultancy firms and research firms, actually. He has advised and worked for various banks and financial institutions as well, for including Banco Azteca, AIB, HSBC, Lloyds, and Swiss banks. His research interests include privacy, preserving machine learning, and ethics of AI. He has been involved in designing and auditing half a dozen of blockchain protocols and more than a dozen distributed application dApps. He was also an early advisor to Ripple, XRP, Adjoint, Ocean Protocol, Arteria, Dev, reviewer of Ethereum Orange Paper, and was one of the founding members of UK Digital Currency Association. He is also an acknowledged unnamed aerial vehicle UAV, unmanned aerial vehicle, sorry, UAV addict. His interests mostly focused on navigation algorithms for unmanned vehicles. He is a regular speaker and contributor in the areas of AI, cybersecurity, fintech, and blockchain. He has lectured in various universities around the world, including MIT, Carnegie Mellon University, UCL, Imperial College, University of Coventry, and he's an adjunct faculty at Harbor Space University and the head of research at the Information Sciences Institute at SRH Berlin University of Applied Sciences. So with this heavy introduction, mashallah, and accomplishment, I would like to basically invite Mr. Anish to give his thoughts about fintech and Islamic fintech. Thank you so much. Over to you, Anish.
Assalamu alaikum.
Alaikum assalam.
Let me share my screen. Can you all see my screen?
Yes, I can see.
Okay. So before I start, I should put a very heavy caveat. My expertise is just at the fintech part of the Islamic fintech piece. I am not an ulama. I don't have any insights into Sharia as our brother Farrukh has. So I will stick to the part of the game where I have expertise in, and I will give. It's a very broad topic. I'll try to give like a very high level. Please feel free to stop me. I'll be happy to answer as many questions as I can, because it's like I spent a good few hours trying to structure it in a way that I could add a lot more value. And it's mostly my thoughts jumbled up, structured in a way I could deliver to you as fast as I could. Okay, so without further ado, let me start. Starting with Wikipedia. What does Wikipedia say about financial technology? As you can imagine, there's a long-winded, definition. The summary of that is when technology meets finance, that's where financial technology emerges. So anything that actually is technology that has been recently come into the horizon, where it goes into finance, that becomes financial technology. Effectively, there is an arbitrage that's being had. So a technology arbitrage where technology, when applied to finance, gives the institution an advantage. That's how I would describe in one-line summary. And, this is something that no one of you should actually have any surprise. This is the normal hype curve. Typically, any technology that comes in, has like a trigger, then there is like a peak of inflated expectation. Everybody expects it to do magic. And suddenly you have a level of adoption, and suddenly everybody recognizes the hype and reality doesn't match up. You go through a trough of disillusionment. Then slowly and steadily, people start recognizing what it can really do, and then it goes into the normal, ecosystem, right? And this has an interesting aspect. And this is an aspect to both fintech as a whole and also for the whole global population, especially the Muslim population. And I should also describe one of the challenges with technology adoption, which is like how people leapfrog generations of technology. So when I describe that, what I really mean is like, if you think about a normal phone, a telephone that's actually a wired phone, it's pretty much a first generation. A lot of the countries that didn't have, first generation phones had much faster adoption of, mobile phones. So you can go to parts of Africa and you can actually see that there are no land phones, you only have mobile phones. And mobile phone adoption hasn't been prevented by the existing telecom organization, because there is no existence of this, population that actually doesn't get that much of an upside by new technology entering the space. So this is typically how you describe it. You have the innovators, then the early adopters, then the gap happens between the early adopters and the early majority. Apologies, somebody just tried to call me. I should have turned off my phone. There's a gap that happens between the first set of early adopters and the early majority. That's typically when the real surge happens, as in from something that somebody thinks is cool to something that everybody starts using. And typically speaking, you could also think of this in terms of value. So imagine we were in a world where we had, going back like 100 plus years ago. So imagine we had access to a time travel machine. We go back in time, and we actually have Edisons and Teslas of the world living. And what is effectively happening is, there was an ongoing war between, Edison and Tesla. Tesla was the person who actually was very keen on AC, alternate current, and Edison was the person who was keen on DC. You know what happened at the end of it, right? But why am I talking about it? The reason I'm talking about it is, like, if you think about AC and DC and the current wars, it was the phase where it was mostly Genesis and custom built. Genesis is in the lab bench. So, you could actually see lots of things I work on there on the Genesis phase. You would never be able to go buy that in any of the shops. A custom build is you can actually pay somebody to just build one off. Okay. So typically software solutions are just one off. That's especially just built for a particular organization. Then there are products. When it becomes products, it's like there are more standard things that are there. You could think of a product like something like this, maybe, right? But this is more a commodity one in that sense. But typically speaking, a product is something like this. You have ADSP, FPG, not an FPG, SDR, software defined radio. So essentially, it's something you can buy. There is a well-known definition of the product, and the real value discovery only happens when it becomes a commodity and a utility. If you think about my description of Tesla versus Edison, what was happening? So we don't actually really care about how many cycles we have, whether it's AC or DC, how many volts we have. We typically speaking plug our machines or laptops into the socket on the wall, and you get current, right? And that's it. That's utility. So we have reached a phase in technology adoption that we actually have everything available to us. We just use it. We just pay for a price. And now I'm going to just switch gears and kind of give you, the context of why fintech has become so competitive and what drives it. What is the real differentiators? What are the key trends that are happening? I'm pretty sure you've actually seen this one, right? It's somewhat old. It's like it's been, talked about to death in that sense. So they call them FANGs. And in addition to FANGs, you have Tesla. I don't know what T would stand for. So, this is the thesis that data is the new oil, okay? So we reached a phase in the world that until, a couple of decades ago, we needed to actually drill the earth, then pump out oil, and you could actually use oil to, run the whole economy. Now we use data, right? And there's a very interesting paradigm that you need to understand. And this has both implications both ways. This is this paper that is published by people from Google and Carnegie Mellon. So it's called Revisiting the Unreasonable Effectiveness of Data in Deep Learning. So now there are three things that you require if you were to actually ever do the kind of converting data into oil. One is you need to have people to do the modeling. Two is you need to have access to the hardware. Third, and the most important thing, and the thing that actually prevents everybody from getting into the space, is data. Why am I talking about this? The reason I'm talking about this is like data in the developing world is a resource that's not being defended against in any good capacity. And any ability to do any innovation only would happen if and only if people have access to data in a fair and open manner. The data arbitrage would actually always be as a disadvantage to a population entering the space. What I mean by that is, if you think about the so-called developing world, and most of the Islamic world sits in the developing world. So we would be entering this game as in a disadvantage. So what does it really mean? I just want to give you like a quick intro of what this really means. Talk about privacy. I mean, again, the construct of privacy, I just copied this one from Wikipedia. Ability of an individual or group to seclude themselves or information about themselves and thereby expressing themselves selectively. Effectively, all that means is like if you use your phone and if somebody else actually, uh, listens to your information, then that's a breach of your privacy. And there are a lot of things that's there, right? If you look in Europe, there is one in the US. There is another regulations. I don't know enough about the regulations on privacy in the Asian subcontinent. I know there have been plans to actually introduce various regulations so we could actually have better protection of the consumers. And the reason that's happening here is we have this challenge. The challenge is the following, right? Think of Google. What is Google trying to do? Google is trying to do ad optimization. It's trying to understand exactly what you're interested in, and it's trying to provide you with that. Amazon, what is it trying to do? It's actually doing supply chain optimization. It's trying to give you the goods that they think you want to buy at the time you want to decide to buy, right? And this continues. It's like Facebook, try give you kind of messages that you would like, and then actually it's actually pandering to a situation where they are trying to use the technology, and it becomes more like creating data. Creating an arbitrage with data that actually gives you the ability to create value out of people, but they get nothing out of it. And this is like in my mind, a pretty unfair situation. And this became really bad in Corona, like as with many things, it's just to flip the thing. And one of the things that's been proposed is the thing called blockchain, right? So, this is from economists like a few years ago. They actually, whenever economists talks about something, know that that's the end of the first part of the hype cycle. In that sense, it just reached the top of the cycle. Economists, it's not a lead indicator, it's a lag indicator. So, the moment anything in fintech gets on the front page of Economist magazine, that it's going to go down. So there's going to be a steep slope going downwards, okay? And the story about, no story is complete without the story of Bitcoin. So in 2007, 2008, what has actually happened is there was a massive meltdown. Literally, October 2008, this paper was published, and I would really recommend that you read this if you have a chance and any interest in cryptocurrency space or blockchain space. So Satoshi Nakamoto, to this day, who we don't know who it is, actually published this thing. And the paper was first published in Cryptography Mailing List, and literally, it got a lot of traction, and in a very short period in time, Satoshi actually, registered the domain. He started coding, and he had the first transaction with Hal Finney. And you notice recently we almost reached the price of $40,000 for one BTC. Okay. Now, what is the definition of blockchain? Okay, I will try ignore the definition and kind of give you some ideas and try walk you through what I think is a more interesting piece. Think of it this way. So imagine, I go to a shop. Typically speaking, I have some money in my pocket, imagine pounds. So, imagine in this imaginary world, Farrukh Bhai is actually running a shop. I go to a shop and I want to buy his books. I buy a book. So I give him 10 pounds. So literally what happens is like my wallet had 10 pounds in the start of the transaction. Farrukh Bhai's wallet has 10 more pounds at the end of the transaction. In the digital world, we have a challenge. The digital world, I can copy my, a 10 pound n many times, as in like as many times as I want. So effectively, I can double spend it, right? And this is a problem. And what blockchain is all about is to prevent this offline double spend, is to prevent me from spending my 10 pounds more than once, because that gives me the ability to print money. And that actually breaks the whole concept of payments, right? So, as I was describing, Bitcoin happened. Bitcoin didn't tick all the boxes. Then Vitalik came along. Vitalik produced his Ethereum white paper, which kind of described the next generation on top of Bitcoin. It's like going to the next level. Okay, if Bitcoin actually could do one specific task, Ethereum was a much more generalized thing, and then it was able to do more things. And more recently in the fintech space, there is a new entrant to the game. It is decentralized finance. Okay, so decentralized finance is where you actually have, in addition to, in addition to actually having some changes in trust, there's some changes in software. So people, the people who actually are from the traditional finance world,
excuse me, Anish,
sure.
Sorry to cut you. Can you please go into the full screen mode?
It can probably go to the wrong screen. That's probably a problem. Let me try. Can you see this?
That's perfect. Yeah.
Oh, which screen? Are you seeing the full screen? Oh.
Yeah, I'm seeing the full screen and your video as well. Thank you so much.
Okay, all right. Okay, so all right, what was I talking about? Okay, so fintech, traditional fintech. The traditional fintech, you actually have software that's being run by institutions. There's a reasonable amount of bureaucracy there, and then we have the new entrant to the game, right? Where we have a decentralized version, where the amount of bureaucracy you have is minimal, and you actually have a trust minimized software. What do you mean by trust minimized software? Trust minimized software is like, if something goes wrong, you can't go to the bank, you can't take them to court, generally speaking. So typically speaking, if you transfer some money from your bank account to somebody else's bank account, right? And if the money doesn't reach there, you can go to the bank and you can say to the bank, my money hasn't gone there. And if that doesn't work, then you can actually go and complain to your financial regulatory authority. If that doesn't work, then you can go to the court, and then you have a legal recourse to justice. But this doesn't exist in a decentralized finance. And it has like a whole gamut of services that are there that you could actually consume. Okay. So let's see. So this is what, I took this from Staking Rewards. Typically, I describe it as like 3 layers, but they have described it as like 4 layers. So the lowermost layer is the protocols that I was kind of describing.
Anish,
right?
Have you moved on to?
I kind of described a Bitcoin, or we talked about briefly Bitcoin. And okay.
Have you moved on to the next slide?
Sorry?
I still see DeFi versus FinTech slide. Is this a slide you're talking about? Still?
Okay. No, I have the next slide. And this is what I was worried about.
Okay.
Okay, hold on.
Okay, I think that then you can go back to the previous mode.
Okay, hold on. Okay, let me stop sharing and try again. Zoom sometimes actually has this problem. That's why Okay, I can actually try increase.
Yeah, I can see now DeFi in context.
Yeah, okay. Is it any better? Is it the screen?
Yes, it's okay. So yeah, you can use this one. Perfect.
Okay, I'll make it 200%. So, okay, hold on. Let's see. Okay, that should be.
Yeah.
Okay.
That would be the maximum, right?
Yeah.
Okay, perfect.
Maximum I can have. So yeah, so this is what I was kind of describing. How could you actually think about DeFi, and how could you separate them into layers? So there's the infrastructure layer, which I was describing. I described 2 protocols already very quickly. I talked about BTC. I talked about Ethereum. So that actually forms the underlying rail. So if you think about the traditional technology, you think about interbank transfers and the rails behind the visas of the world, where you actually can do transfers, switch networks, BACS in the UK. That's the kind of thing that you are thinking about at the back end, right? And then you have a whole bunch of other ones. I probably won't go into a detail because there's a whole bunch of detail there. The second layer is like all the set of services that you require. So, one of the key challenges, as I was describing, Bitcoin actually went up to 40,000, and it actually came down in like, in like 24 hours, it came down like 7% or something, and it goes back up. So the challenge here is like, imagine I had to go buy a tea, normal chai from a shop. By the time I order the chai and get the chai, the price will have changed like 2-3%, right? That's a significant change. So I won't have the money, or the person who's actually selling me the tea will have a bit of a challenge. So you need to have stability. So you have the concept of stable coins. And then, as I was describing, there is this challenge of actually transferring between coins, right? Or transferring between other assets. For that, typically you normally have exchanges. So I will say, oh, I want to sell something, typical like a marketplace. And, one of you might say, oh, yeah, I'm willing to buy. Then I say what my price is, and you say your price, and we get to an agreement and we do the transfer. This happens in a decentralized world. That's called a DEX, a decentralized exchange. Then all the normal things that you actually see in a traditional finance world actually exist there. Now, the question you might ask is like, is all of this halal? It's an open question. I would really leave this question to Dr. Farrukh and other people that know Sharia and all the rest of it better than I do. I understand this more in terms of understanding protocols and designing them, not from a Sharia perspective. Okay, so don't hold me responsible. So think of this as like what it is, what it does. You have a whole bunch of things from payments to insurance, to stable coins, DEX, derivatives, liquidity, and lending and saving. Okay, so again, there are challenges in the space. Do I think there will be innovations and an opportunity? Absolutely, yes. Because there are 2 billion Muslims in the world out of the 8 billion. That's 1/4, 1 in 4. And I believe there's a good chunk of, the 80 trillion assets that sat around the world is allocated to the Muslims in the world, at least the namesake ones. Because oil has actually been found in mostly Muslim majority countries, and that had somehow resulted in Muslim majority countries having large amounts of assets. I don't know much about how they allocate their assets, anything of that sort, but what we can understand is like if there is 80 trillion assets accumulated in the world, you would expect that given that we have 2 billion Muslims, somewhere between 10 to 20 trillion assets is in the Muslim world. So can we actually apply the techniques over here? Absolutely. Why do I think this is going to have significant impact? Very simple. When you go to a bank, when you actually give them the money, you have no idea what they do with the bank, right? If you're going to have a run on the bank, you will only find out when your neighbor says, oh, I have no money, my bank has run out of money, right? And I'm not saying run on the bank hasn't happened. It literally happened. That is the reason why Bitcoin was born. In 2007 there's a massive meltdown, 2007 2008, and that resulted in Satoshi Nakamoto writing Bitcoin white paper, right? Then there are other things, wallets and things of that. So these are tools that you require to actually do things. I mean, effectively, I have a wallet in my phone. That's my phone. There are a bunch of wallets. Everybody can have a wallet in their phone. Not a big deal. Like you buy other things, you will have a wallet. You will do transactions. I won't kill you with all these details. So let me skip. So kind of talked about all of this already. Now I'm going to switch gears and talk about something very different. In fact, I should talk about this, right? There was this very interesting write-up that appeared a few years ago. So I've actually worked with World Economic Forum a couple of times. I did some work on the ethics of AI in finance. If you find the report, you can find my name there. So they had published this report, which was pretty interesting. It was titled "The New Physics of Financial Services." That the title tells you all, right? It really tells you what is literally happening. And it is a key thing that we need to recognize is that people are recognizing that artificial intelligence and machine learning actually has significant impact on what's happening. So I would kind of describe, very, very high level what it means. Machine learning came out of AI, new capabilities of machines, examples, standard stuff. The way I would describe it is like when you go to Amazon, you actually have recommender engines. It tells you what you want. If you go to Google, imagine you search for a flight. Go to Google, you search for a flight in, between say Lahore and say London, or Karachi and London, and then you go to log into your Gmail, then you have all the ads there, right? That's recommender systems for you. Okay, so I'm going to go a bit more faster. I'm going to talk about this as a high level, right? So typically speaking, you have like supervised, unsupervised, and reinforcement learning. And I would really think the reinforcement learning is the thing that actually has the most impact. And anybody who's really interested, I would really recommend this book. This is the book by Sutton. It's a standard textbook for people to understand reinforcement learning. And I will say why it is very interesting. So typically speaking, supervised learning is like, imagine I stay in a room, there's a magic machine that makes tea, chai or coffee for me, right? Supervised learning mechanism, something like this. I wake up, first day I make, the coffee chai machine has this probability. I take this cup up to it and I ask the machine to give me something. And the machine doesn't know because it's half and half probability. There could be some skew, but I'm just saying, right? So the machine is confused. First time I checks for chai, and then, a few days after, it updates itself. Then it knows whenever I turn up, give me chai, right? That's supervised learning. It learns some data, gives it. Unsupervised learning, you get a bunch of data, it goes and learns what it is. So typically speaking, clustering algorithms is okay. You get a bunch of addresses and you kind of try to figure out who all live in a neighborhood. That's a clustering algorithm. Reinforcement learning is the one I was saying. This is an interesting one. Why is it interesting? The agent interacts with the environment and learns. And it has been the one that actually has the largest amount of impact. So if you've been watching DeepMind, they have been using reinforcement learning to do things like, beat the the champion of Go. I mean, one class of reinforcement learning was applied to achieve that. Beat humans in chess. All of those things were achieved by reinforcement learning. Now I'm going to switch gears and talk to you about one of the most interesting innovations that actually happened in recent times in deep learning. It's called generalized adversarial networks. Why am I talking about this? Okay. The reason why I'm talking about this is this, okay? So you might have seen fake videos, right? It's more the case of, you give it enough of training data. So say for example, take the case of Monet, right? A very famous artist. And then, it learns the style of Monet. And then suddenly what it does is like, you go, okay, can the machine convert a photo into Monet style in a painting? It will automatically do that. How can it do that? So there was this guy called Ian Goodfellow. I think now he's in Google or some other place. He was doing his PhD and he came up with this idea. There's two things, a generator and a discriminator. What this allows you to do is actually create data and then use it to fool machines and humans, right? The discriminator tries to discriminate whether it's real or imaginary. Generator tries to generate, which tries to fool the discriminator. The end result of this is that you can actually have synthetic data. Remember, I was talking about privacy and information arbitrage. In this sense, this comes in handy. You can actually do synthetic data generation. And why am I talking about this? This could be something that will be useful and helpful. Remember, going back, I said, if you want to compete in this space, you have three things. You need to have humans who could actually do this, access to hardware and data. And given you are entering this game late, what can you do? Instead of getting the data, because Googles of the world hold it, you can synthesize data. Okay? So just a thought. Then I'm going to switch gears completely, and I'm going to go into finance as such. I'm going to talk about robo-advisors. Okay, so now I gave you like a pretty good idea about how to create a machine learning algorithm, create some recommender systems, how to bootstrap something where you don't have data, synthetic data, how to have some of the more advanced machine learning algorithms in the world, which are the reinforcement learning algorithms. How can you actually go and interact with the financial world? Say, take the case of robo-advisors, right? You have some money, you want to deploy it. How do you actually do that? I mean, unfortunately, the CB Insights one I have here, it doesn't have much in terms of technology coming out of our world. I mean, our part of the world. So there is something in India, but I don't know what it was, right? What is mostly happening is, and this is my observation, innovation of most of this kind happens in the West, and then people adapt it to the rest of the world, right? Now, I think this model could be flipped. What I mean by that is like we could actually do this in a manner where we could actually innovate things. And I think going back in history, I'm pretty sure Islamic history more than I do. So for a very long period in time, the Muslim world, the Islamic world actually was the beacon of knowledge and doing things, right? And over past 200, 300 years or 400 years, I don't know when that sudden decline happened. It's completely wiped out. So there is no trace of any innovation coming out of the Muslim world. So again, what I'm saying is all the technology trends are going to allow us to do this. I was talking about decentralization. Decentralization allows people to walk in and claim the space. And I was talking about generate adversarial networks and synthetic data generation. Again, it's enabling you to actually walk in and do things that the barriers that are around you are disappearing. Now the challenge is like going back to the question I asked is like, is all of this halal? Again, I probably would go and refer to Ghazali because I'm like, I think Ghazali has given us some sense of a norm of the choices we have. I mean, if any of us were to say, I am only going to use halal, I think you can't use a single dollar or a single pound, a single rupiah. Why? Because your economy is actually held in place by issuing bonds. The bonds have interest. And there is no way in any world that you can use any of this without, otherwise you have to do all your transactions as barter, right? Or you have to do that in gold. I don't think they will allow you to trade in gold. They will put you in jail, right? The only choice you have is barter, okay? You know what barter is, right? I turn up and go, I have a goat. Farrukh Bhai has a cow. I say I'll go 10 goats to one cow. That's the only way we can survive. So we need to really rethink. So I will try answer a few questions because I think I've already run out of the time that I've allocated. Farrukh Bhai, do I have any more time? Or
yeah, you can. 5 minutes more if you want to wrap up.
Sure. Yeah, I'll try wrap it up. Sure. So let me try. Okay, so other things, hedge funds, what's happening? This is no surprise. Again, if you have a very large allocation of funds, if you want to have an edge, you need to have machine learning, algorithmic trading. So this is another very interesting one, right? And if you haven't heard about Palantir, you should check because there are lots of things, especially if you say Palantir and in the part of the world that you are from, you will actually recognize it's been used for lots of things. But it's been used for finance, and that's having a very interesting, how could I say, impact on how people do things. It's actually data-driven decision making. Again, I can't go into detail, but I just want to give you an idea. So, fraud detection, right? Can you actually say if somebody's bullshitting you? Another startup that's looking at this. So what you need to recognize is, remember, all of this is examples of machine learning being applied to fintech. And I also gave you like a very clear indication of what you can do, what you can't do. Loan underwriting, okay? So Lemonade, they actually raised a reasonable chunk of money to do, insurance, right? And risk analysis. this is something that everybody does if you are involved in the business of running businesses, right? So again, using data to actually measure risk and then manage it, right? And then, anti-money laundering, right? So I work for HSBC, so kind of have some insights to what happened here. But again, machine learning being applied to tracking things around. The same applies to other technologies as well. And this is something that you would have already come across a lot of times, chatbots. You can't escape them, right? Then, another thing that you would have come across more rigorously, because you are in the Muslim world, you'll be enforced to do more KYC, know your customer, and KYC, AML, anti-money laundering, right? You'll be always asked to scan everything 2 times if everybody else is asked once. And sentiment analysis, like can you actually make sense of what's happening in the market? What does Twitter say? What does Facebook say? So to make all this happen, typically speaking, you have this magical thing called data science, right? It's essentially you create a bunch of models, you run it, do some A/B testing, and then you come up with insights. Then the whole thing gets deployed, and you have a product. And this is typically how this thing happens. And if you are somebody interested in what it is, I would kind of summarize this way. Prior to cloud computing, the cost to compute was very high. Okay, this is again something that I'm interested in. I've done a bunch of work in is cloud computing, so I kind of wrote the Cloud Security Alliance guide, Cloud Bias Decision Guide, moving to the cloud, sat on the ISO committee, so did a lot of work on the cloud. So what I say is, cloud really brought down the cost of innovation. If you wanted to actually have an instance for a few petabytes, you never had the ability to do this prior to 2007. 2007 Feb is when they actually, Amazon exposed the first instance of EC2 to the outside. And what is effectively happening is, like, it allows, as I said, I kind of walked you through a whole bunch of things. I walked you through the arbitrages that are there. And what the cloud actually gives you, again, is this paradigm where you don't actually need to get permission from other people. You could actually get access to hardware and, go build things. So you could actually have a data processing layer, a resource management layer, and a storage layer, all of which, is available to you if you have a credit card, right? And to summarize, I always say this, the future is already there. It's not evenly distributed yet. And unfortunately for us, the uneven distribution, especially in the Muslim world, is a massive problem. Now, we need to really recognize what is happening and try leverage, what we can, and what the new world is bringing to us. I shall stop, and I shall, take some questions.
Yeah, thank you so much, Anish. I think that you have efficiently and very magnificently covered all the aspects, almost all, and majorly focusing on machine learning and blockchain, which are definitely the major components of fintech and driving fintech phenomena to the new highs. And I really enjoyed this session, personally speaking. So if we have any question, I can basically, the participants can raise their hand. I can allow them to unmute them and then allow them to ask question directly. Or if you would like to write, then you can write your question in the Q&A section, and then I will pick it up from there. There is one question, very interesting one. So what do you think about, although like the question is also partly pointed to me, but I would like to have Anish inside while we are waiting for other questions, is that how insurance, like Islamic insurance industry, can benefit from the fintech phenomena in general?
Wow. I think I'll say some words, and I think Farrukh Bhai is better place to talk about some of the things. The way I would describe this is like, I've actually worked on insurance and reinsurance. So I was involved in building one of the reinsurance hubs. So, and I also did the review for the reinsurance standards code. So the way I would say is like, insurance is like thinking about the risk of something happening in the future. That's literally what it is. So the traditional insurance mechanisms that you typically have is instruments like options. And unfortunately, this is going to be a pretty tricky thing, as in like, finding, solutions that exist that you can actually use. And there's also the other side. Even if this goes back to me saying that you can't actually use, if you say, I'm only going to, live in a halal world and I'm not going to use the money, you need to have barter where you need to find somebody that actually has the same needs, the opposite part of it at that point in time, temporality of it, right? When I go to Farrukh Bhai needs to, have goats instead of cow. He should be willing to do that, right? This is a big problem. So Islamic finance has this problem, especially with insurance, that for you to actually run an insurance, you need to have a very large distribution. You need to have a bell curve, right? So that both sides of the curve cancel out. If it's a small curve, the numbers are smaller, it's very skewed. So you won't have the ability to take a shock. Even when you have the ability to take a shock, if you estimate the risk of some black swan events, right? And if you estimate it to be low, it will completely wipe out the system, right? So part of the reason why there was a meltdown in 2007, 2008 was there's like a kind of an insurance thing. It's actually options being bought and sold, right? On investment instruments, right? So this is kind of what I think it is. But again, we need to be innovative. We need to really rethink. We need to be really pragmatic. I will really, go back to my statement about Ghazali. I think, we need to really revisit the question of Ittihad and like think about this that way. Back to you, Farrukh Bhai.
Okay, perfect. There is one hand I can see raised for a question. I will allow them to talk and then they can directly ask their question. Jamil Ahmed Sahab. Can you please unmute yourself? Yeah, and ask question. Jamil, please go ahead. Mr. Jamil, are you there?
Farrukh?
Yeah. I think that I might come back again because I can't hear Mr. Jamil's voice. So I will move to the Q&A section. There is one question actually. Is that what is your, Anish, what is your estimation regarding time required to reach whatever the technology is already there in the developed world to the third world countries? Do you think that is it possible in a short period of time? Yeah.
So I'm going to say something controversial. I'll explain why. So I was describing, I was involved in the cloud very early on. Okay. One of the things I observed is the following. If you actually had real tin and hardware, like, boxes sat over there, right? It's like your ability to adopt cloud will be reduced because you've already spent the money, bought the hardware. Okay. And if you're doing the next iteration, now going to the cloud is much more easier. Okay. And the same applies to the telephone thing I was explaining. If you already had telephone lines and you have landlines, adoption of mobile phones will be much more restricted. So in certain sense, it is possible for certain technologies to be adopted much faster because the misaligned incentives, right? The misaligned incentives of existing providers preventing regulators from taking new decisions would be avoided. So in one sense, that is possible. Then I'll tell you one more thing. I know this is an interesting thing. Look at the demographic of the Muslim world. The demographic of the Muslim world is very, very young. And mostly, who do you think the technology is adopted by? Is a demographic who's younger. So and the third thing I would say is, do we have the kind of money to attract the technology, right? Again, it goes back to my thesis. Very simple. 7+ billion people. We have 80 trillion assets. Given all that has happened in the world, I suspect at least we should have 1/4, right? So going back to the question, three things. Number one, demographics wise, that's the thing that's happening. Very right demographic. The real growth of middle class in Muslim countries, right? no existing barriers that actually you need to break because all the technologies can come in. There is enough of assets there. So do I think that can happen? Allahu alam, but very likely.
Okay, perfect. One last question I would like to ask, and then we will move on to the second presentation. But that presentation will be very brief, don't worry about it. So the last question is, somebody has asked Dr. Shakil that the backend usage of machine learning happening in M-Pesa. Have you heard about M-Pesa in Kenya?
Are you asking me? Oh,
yeah, Anish.
Yes, I know. I've actually met the lady from M-Pesa. Yes.
So the question is, I think, very specific to that product itself. That the backend usage of machine learning happening in M-Pesa, a product by Safaricom in Kenya. Dr. Shakil has researched and identified they have 14 variables to allow financing for the borrowers. So under what specific technology would that fall? Do you have any idea about it?
I'll give you a very quick summary of how M-Pesa happened and what are the things that are happening in that sense, and where I think that they were trying to go. They tried to adopt blockchain and things like that. So the M-Pesa was a situation which literally fits into the kind of description I gave. So, it was like one of the innovation labs in one of the telcos, they wanted to do something. And it just happens that, because there was no existing banks, the people don't have, literally go back to the thesis that I was describing. If you don't have existing people, what it allows you to innovations to happen. So people didn't have existing bank accounts. So this was possible. Then they had this mechanism by which you could transfer value by text messages. Just simple SMS, okay? I mean, literally that's what it was. What they tried to do was they kind of analyzed the risk of default of payments and things of that sort. It's pretty trivial in that sense. You could easily, evaluate the risk by looking at the community and how strong the person was actually attached to the community. So simply put, the way they thought about it was like, if you are a part of the community, if everybody in the community knew that you were a bad debtor, you would have very high incentive to actually do the right thing, right? So it's very trivial to actually build a model like that. You just need to understand the social graph, and you could even ask some human to actually, give this to you, or you just track the communication that goes from the phone, right? And you kind of know, okay, this person transacts with all these people. Let all the people know this guy hasn't, or this girl hasn't returned the money. Pretty straightforward. It's just a recommended system. Did I answer the question?
Yeah, perfect. I hope so. But if there is any, basically, you can again ask, and we can come back to Anish again. But our time is a little bit up, so I will be very quick. Thank you, Anish. Then I will move on to the second presentation, which will be very quick, actually. So let me share my screen first. So Zia Saab, can you see my screen? Yeah.
Sure, I can.
Okay, perfect. Let me just make it bigger. So Islamic Fintech, actually, I am actually answering the question which have been asked before. I think one of the participants asked that, what is the main difference between Fintech and Islamic Fintech? Is there any striking difference between the two? So I would just focus on that one, and then I will just give you a glimpse of the Fintech, Islamic Fintech landscape, and what are the gaps and opportunities there. So what is Islamic Fintech? I haven't found, unfortunately, any other definition, but from my understanding, Islamic Fintech refers to developing and offering improved Sharia compliant financial products and services using advanced technology. So here, what is the striking difference between other forms of finance like conventional finance or traditional Islamic finance from Islamic Fintech is actually that Islamic Fintech requires a different mindset and fresh approach towards finance. So this is actually common in every fintech space, that whether it is conventional or Islamic, what they are doing is actually completely different with a new mindset and fresh approach. And the use of technology, advanced technology, and customer-centric products are the major components of fintech or Islamic fintech. So I think the first 2 points are actually common in any fintech, or be it Islamic or non-Islamic. But the third and fourth point are actually what makes Islamic fintech different from conventional fintech. So the third point is that the financial products and services, as well as the use of technology, should be Sharia compliant, number one. So like we are talking about two main things. Number one, the product itself, whatever you are going to structure. Number two is the platform itself through which you are offering those products and services. And there should be a comprehensive Sharia governance framework, including standards, parameters, review and audit mechanisms, and risk management systems in order to basically avoid the Sharia non-compliance risk. So this basically differentiate Islamic fintech from fintech also. And why I see that it is very, very important at the moment. So look at conventional finance first. So conventional finance has its own merits, but it is not Sharia compliant. So because of that, Islamic finance is kind of a disruptor in the conventional finance space. So traditional Islamic finance is basically a disruptor to conventional finance. And then came conventional fintech. Conventional fintech actually disrupted both in terms of efficiency and also about the use of technology in terms of, and also about financial inclusion. So it disrupted actually conventional finance as well as Islamic finance. But yes, of course, I see that there is a huge potential for Islamic fintech, because now it is disrupting all these three other sectors. For example, like conventional finance, because it is Islamic. Islamic finance, because it is fintech, not finance only. And then conventional fintech again, because it is Islamic fintech. So it is, in terms of Islamic, it is not only profit maximizing approach, but it has some ethical and social aspect as well. And because of the fintech part, it has some efficiency and also the use of technology itself. So just giving you an overview of the ecosystem of Islamic fintech, you can see that like we have a set of huge services. I mean, plenty of services like deposits, consumer financing, trade financing, treasury, wealth management, insurance, and they have some subcategories also. For example, like in deposits, we have Sharia compliant deposits and investment account. And in consumer and business financing, we have sukuk, ijara financing, etc. So these are the services. And if you look at them, these services can benefit from the latest technologies like artificial intelligence, big data, and then mobility, open banking, P2P finance, blockchain, cloud adoption, cybersecurity. And then they are all focused on one thing, which is customers. So customers are like consumers, businesses, and financial institutions. And the use of technology itself is not limited to only a specific operation side. Basically, it covers the whole gambit of the operations. For example, back office, middle office, and front office as well. Sorry, because the time is very limited, I am just skimming through. So if you look at the Islamic fintech landscape and what are the industry players doing, so you have different clusters. We have alternative financing, so you can see actual players in the market in that segment. And then we have Takatech, which is Takaful Tech, and we have Islamic enablers as well under this category. So in total, I have seen, according to IFN FinTech 2021 report, we have almost like 152 players in the market at the moment who are actually trying to position themselves as Islamic fintech players. For example, like you can see under the cluster of P2P finance, there are almost like 16 companies which are doing Sharia compliant P2P financing. Then we have robo advisors. Anish has also talked about it. So we have some companies focusing on robo advisory in Islamic finance and personal finance management. Also, we have these 6 companies over here. So, and then we have blockchain and cryptocurrencies, trading and investment cluster. If you look at the third one is, the fourth one is we have payment, remittances, and forex, crowdfunding, data analytics, challenger banking. So all these segments are already there, and they are growing at their own pace. So what are the gaps and opportunities in the Islamic fintech ecosystem? So just let me tell you what this picture shows you is actually, if you look at the cluster of A, so we are talking about deposits, borrowing and lending activities, and treasury. So here we use big data and AI, and comparatively big data and AI is used in deposits and borrowing and lending more as compared to treasury. And these 3 segments are actually very phenomenal in terms of automating Islamic banking. Again, if you look at the B point, so like in trade financing, we can see the use of big data and AI is very slow, but trade financing, we have this growing Islamic trade financing through blockchain itself. So big data and AI is not very strong in this sector, but blockchain is very famous in that one. And then wealth management, we again see big data and AI as the very major components, but on the other hand, we see that making Islamic wealth management more automated across stakeholders is basically the target over here. And if you look at the insurance, which is Takaful, so supporting the development of Takaful startups, we see that this cloud adoption and cybersecurity is very phenomenal in that sense. But if you look at this picture, then you can see that overall the technology adoption is very slow. And let me just share with you that I was just reading a research report yesterday about fintech adoption in Middle East, and the research showed that it was done by, I think, KPMG, and it showed that the adoption of fintech is very slow, even in the MENA region, where most of the Islamic countries are there. So there is a huge substantial room for growth across the Islamic fintech ecosystem. And if you look at the huge potential for growth, then of course, like, there will be a huge potential and huge jobs market and industry opportunities there. And of course, there will be regulatory and policy challenges. And how to tackle these challenges and issues, I would say knowledge and education gap is there. So we have to fill in this knowledge and education gap so that, like, we would be prepared to adopt fintech phenomena and also to make it productive for the Islamic finance industry. So in that, actually, I would like to basically announce, and I'm very happy that in collaboration, Alif Technologies and IBSEF has collaborated, and we are going to introduce an executive learning program, ELP, and this ELP program focuses on the introduction to Islamic fintech. And this is the brochure, and later we will be sharing this brochure with our participants as well. So it will be only on Sundays, and then there will be 2-hour session for each day. And dates are actually 24th of January, 31st, 7th, and 14th. All these are Sundays actually. And those sessions will be conducted online through Zoom from 4 p.m. to 6 p.m. Pakistani time. And so if you look at the course description, I'm not going to go through it, but and then you can also see the learning outcome and who should attend it and whom should it be beneficial for. The fee structure is already given, and there will be some early bird discount as well. So with that, I think I will just end my presentation. If you have any question, please feel free to ask, and I will be happy to just quickly answer that. Thank you.
Farrukh, there's one question that I like you to answer, from one of our participants. This is about how Sharia compliance is ensured when you are accessing, moving across these different platforms, and how we ensure the Sharia compliance part is taken care.
Okay, perfect. So as I understand, like when we are talking about different platforms, can you elaborate what does it mean? Is it like from like fiat currency, or like we are talking about crowdfunding platforms, or something else?
I think this is a simple, more simpler question, that when you're using different technology or different tools, how Sharia compliance aspect?
Okay, yeah. So I think unfortunately what has happened that we haven't focused on the technology in the sense that although Islamic finance has been there for a long time, and we have also got industry standards and also parameters to do anything actually, like for example mudaraba, musharaka, ijara, but how to do mudaraba, for example, in a technology-based environment, although like the basic principles would be same, but there will be some small nitty-gritty, some small technical issues which we need to look in. If we can cater for these, we can easily make it more Sharia compliant. I just give you an example of smart contracts on blockchain, for example. So that if you look at a murabaha transaction, so you need to ensure that this murabaha transaction it has different lags, and it has different contracts actually, and they are supposed to be executed in a sequence, right? So this is actually a typical murabaha transaction. So for example, like if you have a smart contract, there will be no point of executing murabaha contract if there is no sequence. For example, like a smart contract will automatically take care of the sequence itself. So there is then in this way you can basically easily minimize the Sharia non-compliance risk. So I think if I answer directly to the question, is that the use of technology is important. So, but the standards, the existing standards we have to work on them so that like they will be able to accommodate the technological advancement as well. Because although like the basic principle of mudaraba, musharaka, ijara will remain same, but there will be some small nitty-gritty, some small issues which we need to take care of.
Thank you. And there is one more question about microfinance using the technology or the fintech. Probably that's trending. And
so I think that this area is growing at a faster pace as compared to other sectors of the Islamic fintech ecosystem. Like I showed you some of the market players and industry players in the ecosystem already. So you can see that crowdfunding, microfinancing are already thriving, and there are more companies coming into this segment of the Islamic fintech ecosystem. How they can do it, actually, there is a lot of opportunity, especially for the third world countries or the developing countries and underdeveloped countries. And unfortunately, most of them are Muslim countries. But I think that through the microfinance technology, like crowdfunding platforms, P2P lending platforms, we can actually have a productive outcome out of this technology and through this phenomena. So the way I see it is that how to make it Sharia compliant or to adopt it is actually Sharia scholars have to work harder. And the second thing is the regulators and the policymakers have to look into it, because most of the time from my in most of the cases, what I have observed is actually that the regulatory requirement, the legal requirement, the policies have to be there so that like the fintech startups and the innovation can thrive within the economy.
Thank you, Farrukh. Thank you, Anish. And I think this brings to us towards the end of the session and the webinar. I'm sure there are a lot of questions among our participants, that the technological jargons are there. There are, new areas to explore. But within a brief time of an hour and 15 minutes, I think this is a wonderful orientation for all of us on Islamic fintech, the new technologies. We got many pointers to explore, and with this all in the background, we have also introduced this new course on Islamic fintech. So it will be an online course, and I'm sure all of you who want to learn about Islamic fintech in more detail, this course will be beneficial for every one of us. So with this words, I like to thank Dr. Farrukh Habib once again, Mr. Anish, Mohammed once again for joining us today with IBS CEIF and Alif Technologies. And we hope that in future we can also maybe pick up some of the specific aspects of the fintech or the technological revolution that is coming up, and we can again learn from your experience and from the exposure that you have, and that will also benefit the Islamic finance space and the Muslims population, where they can reach and get benefit from these Sharia in a Sharia compliant manner. So thank you very much once again, all of you, all the participants for joining us today, all the panelists and all the experts who have joined us today. And with these words, I like to conclude the webinar. The recording is also available on our Facebook. You can listen to again, you can share with your friends, your colleagues, and do stay tuned for IBA CEIF further webinars, further courses, and further discussions to take Islamic finance to the next level. Thank you very much, and Assalamu alaikum wa rahmatullah.
Walaikum assalam. Thank you so much, Ahmad. And I, from my side also, just want to say that like I can see that like there were some more questions which have remained unanswered. So please do feel free to contact us. Anish, I hope that on behalf of Anish, I can also announce that like he doesn't mind to answering those questions. But yeah, from my side, I am also okay. So you can directly contact me with that. Thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh. Anish, would you like to say something?
Nothing much. You have my contact details. If you have specific questions, reach out to me. Inshallah, I shall try my level best to answer.
Thank you so much.
Assalamu alaikum.
Okay, everyone. Wa alaikum assalam wa rahmatullahi wa barakatuh.